Trying to keep tabs on everything happening in crypto, it feels almost impossible sometimes. There's always something new, right?
It really is moving fast.
Right.
And cutting through the noise to see what's actually significant, that's the challenge.
Exactly, which is why we're doing this deep dive today. We're looking at a specific legal update, the crypto brief from Lowenstein Sandler, May 1st, 2025.
Right. It's a great resource because it's not just headlines, it's proper legal analysis, gives us a focused look at some really key regulatory and legal shifts happening right now.
So our mission, yours and mine, is to sort of unpack these changes, figure out what they might mean without getting totally lost in the legal jargon.
Sounds like a plan.
Okay, so where do we jump in first? What's catching your eye?
I think we have to start with the Federal Reserve Board action. It's pretty noteworthy what they've done regarding banks and crypto.
Ah, yes. The brief mentioned they've actually withdrawn some guidance. What's that about?
That's right. Essentially, they pulled back two specific supervisory letters. Remember that one from August 2022?
Vaguely. The one about banks needing to give a heads up.
Exactly.
Yeah.
Banks were supposed to provide advance notice for crypto activities. That's gone. And then there was another, August 2023, about stablecoins.
Right, needing a sort of non-objection, like an okay from the Fed.
Precisely. Banks needed that informal green light, that non-objection, to deal with stablecoins. That requirement's been withdrawn too.
Okay, wow. So the immediate effect is banks don't need to ask first.
Pretty much. For those specific crypto asset and stablecoin activities covered by those letters, the mandatory advance notice and the non-objection process, they're off the table for now.
That sounds like a pretty big deal. Why now? What's the thinking?
Well, the Fed's official reason is about alignment. They say it's to align their oversight with how risks are evolving, and interestingly, to support crypto asset development within the banking system.
Support development, that sounds almost encouraging.
It does, doesn't it? It hints maybe at a bit more openness to integrating crypto into traditional finance. Of course, saying it aligns with evolving risks also gives them flexibility.
So it could be seen as giving banks more room to experiment, maybe, without the immediate red tape.
That's definitely one interpretation. A bit more leash, perhaps, let the industry innovate a bit before laying down harder rules.
But it's not a free-for-all, I assume.
No, absolutely not. The brief is clear that the Fed and the FDIC are still watching closely. They specifically said they'll consider, more guidance later as things develop.
Okay. So more like a pause or a recalibration on those specific requirements, not a total hands-off approach.
That seems to be the sensible reading, yes. A change in the immediate oversight posture.
Got it. Okay, let's pivot slightly. The brief also mentioned something with the SEC and PayPal stablecoin.
Ah, yes. This is interesting, too. It looks like the SEC has dropped its enforcement action regarding PayPal's stablecoin.
Dropped it. Didn't PayPal get a subpoena or something?
They did. Back in November 2023, according to PayPal's own 10Q filing, they disclosed they'd received one related to their stablecoin.
And now the SEC is backing off. What could that signal?
Well, the analysis in the brief suggests this might, and it's a might, be part of a wider trend. Perhaps the SEC is sort of resetting its enforcement priorities for digital assets.
Resetting how? Like focusing elsewhere? Or realizing maybe their initial take was too broad?
It could be either, or both. Maybe they decided this specific case wasn't the hill to die on, or perhaps they're being more selective now. It's definitely something to watch. Is this a one-off or the start of a pattern?
Definitely one to keep an eye on. Okay, so while regulators are adjusting, the industry isn't standing still. Tell me about this Kraken embed.
Right. This is on the innovation side.
Yeah.
Kraken embed is basically Kraken, the exchange, offering crypto as a service.
Crypto as a service, meaning?
Meaning they provide the back-end infrastructure, the whole trading system, essentially as a plug-and-play solution for other financial companies.
Like traditional banks. Or maybe fintechs.
Exactly. Banks, fintechs, neobanks. Any institution that wants to offer crypto trading to its customers, but doesn't want to build the whole thing from scratch. Kraken Embed provides that engine.
So it makes it much easier for, say, my bank to suddenly offer crypto trading.
Essentially, yes. The brief gives the example of Bunk, a European neobank. Apparently, they used Kraken Embed and got crypto trading live for their clients in just a few weeks.
Wow, weeks. That's fast. That could really speed up adoption if more banks take that route.
It certainly lowers the barrier to entry for established players.
Okay, and sticking with big players integrating crypto. MasterCard, stablecoins again.
Yes, MasterCard made an announcement. They're enabling support for stablecoin transactions.
How does that work? Can I, use my MasterCard linked to a stablecoin wallet to buy stuff?
That's the idea. Customers with digital wallets holding stablecoins could use their MasterCard cards at merchants, just like a regular transaction for the customer.
But what about the merchant? Do they get paid in stablecoins?
They can. That's the key part. MasterCard is partnering with Circle, the USDC issuer, and Nuvei, a payment processor. Through these partnerships, merchants will have the option to receive settlement in stablecoins, even if the customer paid using their card linked to that wallet.
Ah, okay. So the choice is with the merchant whether they want crypto or regular money. That makes sense.
It bridges the gap, allowing stablecoins to flow through existing payment rails, but giving merchants flexibility.
And there's something about OKX, too.
Yeah, a separate partnership. MasterCard and the exchange OKX are launching an OKX card. The goal there seems to be making it easier for OKX users to access and spend their funds via a card.
It really feels like the big financial players are leaning in towards crypto now, doesn't it?
It certainly seems that way, finding ways to integrate rather than just watch from the sidelines.
Okay, let's hop across the pond. The UK seems busy, too.
Indeed. The UK government put out draft legislation for regulating crypto assets.
More rules. What are they aiming for?
Two main things, they say. One is to drive growth in the UK financial sector, make it attractive for crypto businesses. The other is, naturally, better customer protection.
How are they doing that?
By bringing certain crypto service providers under the regulatory umbrella of the Financial Conduct Authority, the FCA. So, more formal oversight.
Standard goals, really. Growth and protection. But the brief also mentioned UK-US collaboration.
Yes, that's quite significant.
Yeah.
The UK Chancellor announced plans for the UK and the US to work together more closely on digital asset regulation.
Like harmonizing rules.
That seems to be the hope. They plan to discuss it further at the next UK-US Financial Regulatory Working Group meeting. More international coordination could definitely bring some clarity, which the industry often asks for.
Absolutely. Consistent rules across borders would be a big step.
Okay.
One last piece from the brief. Something happening in Arizona.
Yeah, state-level action. The Arizona House passed Senate Bill 1025. It's called the Crypto Reserve Bill.
A crypto reserve. For the state.
That's the idea. The bill aims to set up a publicly funded crypto asset reserve fund for Arizona. It passed the House 31-25.
And now?
Now it goes to Governor Katie Hobbs. She can sign it or veto it. So its fate isn't sealed yet.
That's ambitious. How would they fund it?
Well, interestingly, there was companion legislation approved too. It allows the state treasurer to use assets seized in criminal cases to partially fund this crypto reserve.
Wow. Using seized assets to buy crypto for a state reserve fund, that's definitely a novel approach.
It is. And whether it actually happens depends on the governor. But
Yeah.
it just shows you the kind of thinking happening even at the state level. People are exploring different ways to engage with these assets.
Okay, so let's try and pull all these threads together. We've got the Fed easing some rules, maybe the SEC rethinking enforcement, new services like Kraken Embed, MasterCard integrating stablecoins, UK legislation, US-UK talks, and even states like Arizona considering crypto reserves. What's the big picture?
It's a really mixed but dynamic picture, isn't it? You've got some regulatory pressure easing maybe temporarily in some areas in the U.S. At the same time, you have very concrete steps by major financial players to integrate crypto more deeply.
And active legislative efforts happening too, both nationally and internationally.
Exactly. So it's not just one direction. It's this interplay between regulation trying to catch up or adapt and the industry, including traditional finance, moving forward with innovation and integration.
It really underscores how much this space is still evolving. Things are definitely not settled.
Far from it. The crypto brief really captures that sense of ongoing change and, frankly, uncertainty in some areas, but also definite progress in others.
So thinking about all this, the regulatory shifts, the new tech-enabling integration, the international talks, it makes you wonder, doesn't it, what new doors might this open, or what new challenges pop up when digital assets get more woven into traditional finance?
That's the key question, I think. How does this change things? For institutions, yes, but also for individuals. Does it make crypto easier to access, safer, riskier?
Lots to think about there.
Yeah.
Definitely worth keeping an eye on how these threads continue to develop. Thanks for breaking that down with us.
My pleasure. It's a fascinating area. And staying informed on these shifts is, well, it's pretty crucial right now.